Good afternoon, everyone. Welcome to another edition, Market Hunter Thursday with Herve. So excited to be back. We are going to the Windy City today, to the city of Chicago, Illinois. So let's get into directly some of the stats on Chicago. Population 2.7 million, much larger than I originally thought when I started doing a little background check on Chicago. Median income, $58,250. Median rent of $1,111, and median home value of just about $260,000. So the headquarters also of Boeing Aerospace, United Airlines, Conagra, and the Golden Arches, Mickey D's itself, headquartered in Chicago, Illinois. So without further ado, Mr. Jonathan Klemm, directly from Chicago. Thanks so much for being on.
Yeah, thanks so much for having me here.
So, Jonathan, listen, there's a lot of markets to choose from. What is unique about investing in Chicago?
To be honest and kind of frank, like the city is old, right?
Yeah,
The inventory is old, right? And
right.
personally, being a general contractor, like I'm looking for the oldest house on the block, and most of the houses on the block in Chicago are old. Chicago is big, right? So down where I am in the city, it's expensive. But you go 30, 40 miles outside of the city, you can go find houses for 30 to 40,000, that are full gut rehabs, opposed to being in the city where you're paying a much higher price. You have that range of flexibility in price. And then additionally, if you're in the city, you can kind of take that appreciation approach opposed to kind of going into some of the different neighborhoods that provide much more cash flow. So you kind of have a huge variety of assets that you can acquire at all different ranges.
Gotcha. For what you've seen and for what you've done, is it much more appealing as an appreciation play based off of the properties that you target, or as a cash flow play?
For me, I'm totally more on the appreciation play.
Okay.
That's solely because I bought in neighborhoods that I personally would want to live in, feel comfortable in. I'm investing on the Northwest side. I also, want to have tenants that I don't even have to think about, are they going to be able to make the rent this month? What type of problems am I going to have? And then for those same properties, I took the approach of getting rid of everything that was in there and putting it all back new. So that way, all those capex expenses, HVAC, water heaters, all that type of stuff, like I'm not even thinking about it. And
Right.
then, 7 to 10 years down the road, I sell it off when some of those things are coming in, and then kind of double down on some bigger units.
Has there been any new development going on to kind of supplant any of that old inventory?
I'm on the Northwest side, so kind of the Bucktown, Logan Square, Wicker Park area. And if you kind of follow the blue line runs basically from city center northwest along the Kennedy Highway and all the way to O'Hare. You follow the blue line and you'll see over the past, 10, 20 years, everything just continues to push out northwest and gentrify in that area. And then there's additional infill of new construction homes. We're actually working on a new construction project right now in Bucktown ourselves that we're finishing up. A lot of the homes here are 1900s, even before the 1900s, right? And so like one of the things I'm always advising our clients and other investors is like those brick buildings, they're pretty stout, right? But some of these framed buildings that have been sitting here for 100 years, like you just don't know what's behind those walls. You don't know how sturdy they are. Like you'll see some buildings that are literally touching gutter to gutter because they're leaning that much. Yeah, I'm always advising people get a thorough inspection of those framed buildings because they're just not as sturdy as the brick buildings. Right now, some of the hotter areas along that blue line are kind of like the Avondale, West Irving Park, Hermosa, anything within real walking distance of about 20 minutes of that blue line are just on fire. Will always continue to be, in my opinion. I've always bought near the blue line as well.
Gone through 6 straight years of population decline. It's not a metric that is typically attractive towards real estate investors. But this is the interesting thing, and I'm, not speaking with you now, but really the listeners, where even within a city that has that kind of, such a standout decline, there are opportunities. Why do you still feel that there are opportunities and you're comfortable and confident in some of the investing that you're doing, even in the midst of 6 years of population decline?
At the end of the day, like, sure, our taxes are high, but if your numbers work, with the high taxes, your numbers work, right? So I
Yep.
mean, and there's deals to be found, right? A lot of people are leaving. That means a lot less investors are investing here.
Right.
Uh, and so that gives people like me and people who know the area really well more opportunities. But really, the biggest hit is definitely the taxes. Definitely, kind of like the political views and everything here. Definitely pushing people away, want to go get lower taxes. But I really see that push to the northwest, especially just because of the transit, right?
Hmm.
Um, Easy access to O'Hare. A lot more people are doing the Airbnb thing as well now. I know it got kind of pushed down during COVID, but along the blue line, it's huge. There's tons of new Airbnbs popping up on a regular basis.
When folks are moving out, are they moving out of the city to some of these areas you're talking about up in that northwest area? Or do you think that they're even completely moving out of Illinois altogether because, like you said, of the property tax issues and other, societal issues that may be going on?
Yeah, I think it's a combination of both. A lot of the people in the suburbs are moving completely out of Illinois. A lot of people in the city right now, kind of in that high rise condo area, are moving to the suburbs. I've helped a few friends close some properties in the suburbs. One of them had 36 walkthroughs in 2 days and had
Wow.
12 offers, right? And that was on multiple properties that we went to look at where there's 10 to 12 offers, right?
Wow.
Uh,
Wow.
we yeah, the last one we closed on 20,000 over asking. Uh,
Okay.
the market in the suburbs, it's just on fire. Everyone's moving out of the city. Not,
Right.
not everyone, but a lot of the people in the condos, right? Like my personal opinion, now is a good time to be buying condos
Sure.
and flipping
Right.
condos, right? Like
Yeah.
something like a Warren Buffett thing, be greedy when everyone's fearful and fearful when everyone's greedy, right? Like
Yep.
condos are going to come back. People are still going to live there. It's not like, in my opinion, like the office and retail space
Right.
where, COVID's completely showing us that we can all work from home. And,
Remotely.
and,
Sure.
and that's what scares me more than anything. Not that I have any office space, but, those are the, investors that are hurting more than anyone. At the end of the day, like, real estate, living somewhere, everyone always has to have somewhere to live. Like it's just not going anywhere. You just have to kind of see where people are going. And in my opinion, where everyone's going, I'm trying to go the opposite way.
If you want to borrow Chicago Bulls analogy, what quarter would you say that we're in regards to that transition that you're seeing taking place in the city, people moving out of the condos in the city out to the suburbs? Was it taking place before COVID began and COVID just accelerated, or is it still going on and you expect that to continue to occur throughout this year?
I'll just speak from my own personal experience, but I've personally just noticed it a lot more since COVID hit.
COVID, sure.
Um, and a lot of people also at my age and generation, right? The kind of millennial, all of us came into the city, into the happening spots, going out to the bars and the restaurants, right? And to
Yep.
be honest, a lot of my friends are having kids now, and
Right.
and the city isn't always perfect for kids, and so I think you're having that outflux of millennials
Yep.
right now. So I would kind of say we're in the middle to the third quarter of, a lot of us are moving out. Maybe in the next year or so, there might be another generation coming in that are kind of moving back into the city.
When you talk about helping real estate investors, either through fix and flips or just a modified renovation on a home or an apartment or something, what have you found as a good source of supply of homes for real estate investors out by where you live?
Aside from quality builders, but I'm definitely taking more of a shotgun approach, right? So we're doing direct mail.
Okay.
I'm an agent, but it takes a lot of time to search for the properties, right? So I have other agents that I'm working with that are always looking off the MLS. There's tons of MLS deals still happening, right? I would
Sure.
try to
Yep.
write, as many offers as possible, right? And see what sticks, because every homeowner thinks their home is worth more than it actually is.
It's always the case. It's
And so
always
it's
the
like,
case. Right.
yeah, you got to find on the MLS, you just got to get crafty with your searches and see what's been on there forever, see what's been posted, lapse and then been reposted. I'm always like key feature searching like as is properties, because I know they're run down
Right.
on the MLS, and then just networking, right? I'd spend, probably half my day usually just talking on the phone, networking, letting people know what I'm looking for. I think that probably is the most valuable thing than anything. If you're
Mhm.
talking to people in the industry, real estate investors, lenders, attorneys, anyone who's, around property, they're going to hear of someone who has property that need to be rehabbed.
Listen, it's a networking industry, right? I mean, it's who you know, when you know, that's so damn helpful in getting you that next property and so on and so forth. For you and your team, is there like a model property that you specifically target, whether it's single family homes, duplex, triplex, things like that?
We prefer a gut rehab, and
Okay.
that's easy for the specific reason that you're taking everything out, right? And
Yep.
in construction, when you
Hmm.
take everything out, like there's not as many unknowns anymore, right? But when
Right.
you're trying to piece things back together, it's just like, there's so many things that come up when you start opening up walls, and there's mechanicals here and plumbing there. It's just like you just don't know what you don't know. And
Yep.
so we definitely prefer the gut rehab because it's just easier, and it's honestly ends up being quicker a lot of the times because you can just get it all out and put it right back. Maybe the most important thing is you're providing your client a product that's going to last 15, 20, 30 years before it needs to be rehabbed again, especially for those large capex expenses. Plumbing, for instance, right? All of these old houses in Chicago have galvanized plumbing. When you switch out the copper, like, you're not doing that again for years and years and years unless there's major problems.
Folks are moving out of the city and going out to these suburbs. Is it pretty much just single family homes that they're targeting in their move?
Yeah, I think as you push further out from the city, that mix slowly goes down to
Mhm.
where the further you're out, the more single family there is. And I'm pretty sure that's probably relevant to most metropolitan
Sure.
areas
Yep.
where you push out, and just the density of population starts to scatter. And there's a
Yep.
lot more single family, there's a lot more room for more development. And I feel like, a lot of the times that's why people are moving out of the city to the suburbs is they want space, right? About 20 miles outside, you're probably in the middle, and then 40 miles, you're really getting to a lot of those single family houses.
If you could talk about some of the finishes, do they need to be really high end finishes? And I'm sure it depends on what neighborhood you're doing that work in. You want to take a look at what some of those other houses have been finished with and things like that. Or do you typically target high end finishes for your product, or would you call them more mid level?
The easy answer is it depends, definitely.
Yeah.
And the first and foremost thing I think any investor should do is look at the comps. What is the highest, ARV comps selling
Yeah.
for, and then what finishes do they have, right? Because
Right.
that's what you should do. Like, easy answer, right? Like, you don't want to over finish it and you don't want to under
Right.
finish it. You want to be where you are at with the comp. Where I'm at on the northwest side, like, we're usually doing granite backsplash,
Mhm.
shower doors, pretty high end finishes. This is definitely more of kind of like the B plus BA neighborhoods. And so, yeah, you're doing some of the nicer finishes on the single family house we're finishing up. It's definitely like A plus finishes, super big slabs in the bathrooms.
Let me just leave it here. There's been a lot of talk, and there's been a lot of movement as well of building single family homes for rent, right? Do you get involved in any of that? Is there, a market for that?
Yeah, I don't see it here too much. And I'd just say that's mainly due to the price of building. It's more expensive than it's ever been to build. You're just not seeing new construction for rentals unless you're talking, big apartment buildings, right? Eight plus buildings at least. I don't know too many builders or investors that I would even know of that have been doing new builds to rent, to be honest.
Jonathan, I want to end it on you giving us a little bit of insight into quality builders. Please share with our listeners, our viewers here, exactly what can they expect out of quality builders and what you guys do.
Trying to do things differently as a general contractor. I think I was kind of explaining to you earlier that, like, if there's any industry that most people can point to that's behind in technology, it's construction, right? Real estate is even further ahead than construction,
Yep.
and I think a lot of that is due to the people in the industry and the lack of willingness to change. These
Yep.
guys are not used to using their phones and signing into the apps, and it's
Right. Right.
confusing. So I mean, we just see a tremendous amount of room for expansion and growth and leveraging technology
Yep.
opposed to building it. Right now, we're using a lot of cool project management software where our owners are getting, updates on projects on a daily basis. We do schedule updates on a weekly basis, budget updates on a monthly basis, and really just trying to provide extreme transparency to our clients, right? I just think so many contractors in the business, one, don't know their numbers super well.
Mm.
So we're super focused on data, collecting data, understanding, the exact price per widget, whatever, call it linear foot, square feet, cubic yards of whatever the materials, and knowing those numbers so good eventually that instead of going to subs to get bids, that we're going to the subs and telling them, hey, here's the price that we know this is worth, are you willing to take the job, right? There's so many struggles with real estate investors and trying to understand the cost of renovation. And
Right.
so really, we want to get to a point where we're able to provide some type of client portal where you're able to log in and basically you're getting kind of real-time estimates based on maybe the square footage of your house, how many windows, how many doors,
Right.
and we're able to output, some rough budgets for you so that you don't have to have us come walk the property to get an idea on how much it's going to cost. And so we're just trying to leverage technology and transparency. I think those are two things that if we can do those, that, there's tremendous amount of room for growth and expansion, like I said earlier, and that, we don't really plan on being just a Chicago business. We plan on being a nationwide business.
Really appreciate it. Sounds like Quality Builders is a breath of fresh air, to this industry, right? Like you said, the technology and the transparency, and it's needed. Appreciate you. We wish you nothing but much success.
All right. Thanks a bunch, Herb.
What do you think about that? Investing in Chicago, you would have never thought, right? Even in the midst of 6 years of population decline, at the end of the day, there's a lot of opportunity to do things. You just have to know where, right? It's something that we always emphasize when we talk about location, right? It's not only that primary city, but it's the secondary, it's some of the tertiary cities, the activities going on. And what's interesting was this Northwest area, the activity, some of the gentrification going on over there, really because of this blue line, which, right, it can give you direct access to the main airport, O'Hare Airport, and so on and so forth. So listen, folks, you see Jonathan's contact information right there on the screen. If you enjoyed the show, please slam that subscribe button at the bottom. Thanks very much, and we will see you next week.